sector once again, right? It was a mixed set for the auto stocks in terms of overall sales. We just heard from the management of Bajaj Auto as well that the two-wheeler demand is picking up. They expect 6 to 8% growth in the domestic two-wheeler sector. Kumar Rakesh, who is the India analyst at BNP Paribas, joins us now to talk about that. Kumar, thanks a lot for joining in. First, I don't know if you had a chance to listen to the management of Bajaj Auto, but nevertheless, I'll tell you that they spoke about a 6 to 8% growth in the domestic market, and some export markets are picking up. How are you positioned on the stock now?
So we have a neutral rating on Bajaj Auto, but two-wheelers since the last festival season has definitely seen a recovery in the demand. Although the challenge which we find in the two-wheeler demand overall is the demand drivers seems to be quite mixed still. And secondly, the second half will start becoming a much tougher base. So we'll have to watch out that how the growth sustains in the second half of this financial year. I recall that in the first half of last financial year, the base was relatively muted because growth was not that strong, which turned around in the second half. So we'll have to watch out that if this strong growth which we have been seeing can continue to sustain into the second half. The growth numbers which you are talking about does imply in the second half, actually the growth is going to moderate from where it is right now, closer to low teen numbers, which most of the companies are reporting.
Okay, so that's on Bajaj Auto. What about the overall auto sales numbers for June? What has your biggest takeaway been? And what are the stocks that still stand out where there could be both valuation as well as growth, appreciation now?
So from the overall industry perspective, the couple of things which stands out, one is MHCV sector growth. During election period, it was expected that the MHCV demand will start slowing down and first quarter could be muted. But on an overall basis, MHCV demand has been quite resilient in the first quarter despite elections and possible muted government spending during this period of time on the infrastructure side. So that gives us comfort that possibly we are likely to see a capex revival that driving the next upcycle for the commercial vehicle, especially the MHCV segment. And if that happens, this would be only the third time in last couple of decades when the down cycle for the commercial vehicle, MHCV, will end without any decline in volume. And that is what we are expecting, that possibly we'll start see a recovery and an upcycle for the MHCV sector. The second thing which stands out on the industry basis is the tractor demand, which has been consistently improving over the last 3 months. Recall that early this year, tractor demand had started reporting quite a bit of decline. And that had started raising concern, what if the tractor demand starts getting into a down cycle in FY25? The numbers which have been coming for the last couple of months, and especially in June, does give us comfort that possibly that down cycle risk is not there. And the mid-single digit growth, which most of the companies are talking about, is quite achievable in this financial year. So that is the second thing on the overall industry perspective. From stock perspective, our topic are Maruti Suzuki and Tata Motors. We also like Mahindra and Mahindra. For Mahindra and Mahindra, there are multiple catalysts still lined up from near to medium term. They are going to see a very strong model launches, and that is something which should continue to keep the equity story of Mahindra quite exciting. Tata Motors most likely is going through a consolidation year in which they have seen a very strong turnaround over the last couple of years. And this year, most likely they are going to consolidate all the gains which they have established so far. And that gives another leg up possibly as we move through this financial year, as we start gaining more comfort on their FY27 targets, which are quite aggressive. And we don't think it's getting built into the estimates. Maruti Suzuki is one name which hasn't done much. Part of the reason is that the entry segment demand is something which has been quite weak, and Maruti has been struggling, and possibly one of the only few companies which is struggling the most because of that. But we'll have to see how the budget pans out and if there are any triggers, especially for the unorganized sector, that can potentially drive recovery in the entry segment, and that could be a catalyst for Maruti Suzuki as well.
Okay, well, we will let you go on that note. Thanks a lot for joining in. We'll step into a quick break. On the other side of the break, we'll put focus on the commodity space with Manisha Gupta. Stay tuned.